Hi guys, how are things? I want to have a quick chat with you about pensions. This week I've been focusing all my activity on Instagram around pensions, and the reason is that it's pensions season. So what this means is that when you get towards October, November each year, all the life insurance companies start to advertise about pensions, because usually people that are self-employed will offload a lot of their tax into a pension plan. That's not something that a lot of people know they can do, but trust me, you can. If you're self-employed and you don't know what you're doing with pension plans, please give us a shout. But I want to speak to everybody about pensions in general. And the reason being is that pensions are something that I think absolutely everybody needs. It's to replace your income when you get to retirement. If you've followed me for some time now, that's one of my key steps when it comes to a financial plan, is to replace your income when you get to retirement age. But what I want to speak to you today about is the components that make up a pension plan. So you're going to have a few different components, but the main thing is whether you're contributing to the pension plan by yourself or with somebody like an employer. Okay, now if it's by yourself, you might be self-employed, or you might have a job where your boss doesn't pay into your pension plan with you. And then if you are lucky enough that you have a company pension plan, you and your employer will obviously pay into that. And that's the first component, your contribution. All contributions are tax deductible, so that means you get tax relief on them. Again, I'll explain this fairly quickly. It's either 20% relief or 40% relief, depending on whether you're on the lower rate or the higher rate of income tax. So it's fairly easy to get your head around. To use an example, on a €100 contribution, if you're on the lower rate of income tax, you get 20 quid back. If you're on the higher rate of income tax, you get 40 quid back in tax. So that's a rough rule of thumb to use. Now, after you contribute your money, it's going to be invested. And this is where a lot of people don't understand what happens, especially people that are in company pension plans or people that maybe already have a pension plan. The most important part after the contribution is how your pension grows and how much interest it attracts by investing it on a monthly basis or daily basis, whatever way you want to look at it. The bigger the return, the bigger the fund you're going to have when you get to retirement age. And the last component is what you want out of your pension plan. Do you just want a small income to top up rental income you already have? Or is it going to be your sole source of income when you stop working at 65? The point of what I'm trying to get across here is that everybody's different, guys. It's not a one size fits all, and it never is when it comes to pension. So it's very important that you deal with an advisor or team advisors that can help you understand when the best point for you is to get into a pension plan. Now, the other thing I want you to consider is timing. Okay, we get a lot of clients into our office, and some clients we actually get them to reduce their pensions or stop their pensions because it's not the best time for them, because they might have too much short-term debt. They might not yet have a mortgage. They might be in the middle of planning or saving for a mortgage and they want their house quickly. Therefore, there's no point in putting money into something 30, 40 years away, maybe over the next 6 months or a year. Not a lot of advisors would agree with that. But for me, my practice, we run askpaul on what's called cash flow basis. So we look at what's coming in and what's going out now, forecast it right the way into retirement age and actually right the way up towards 100 years of age if you're lucky enough to live that long. So what I want to say to you is that if you are confused about pensions, please reach out to us for a pension consultation. The pension consultation is €149. If you have a pension or you had a pension and you don't know where it is, we can help find it, track it down, and maybe move it into your own name and give you really good benefits from 50 years of age rather than normal, which would be 60 or 65 in most cases. And if you have a pension, we could probably help you find your pension that you have, look at where you're invested, look at your charging structure, and help you reduce or get more competitive rates. I'm fairly confident there's something that myself and my team can do for you when it comes to pensions. And it might not be about starting a pension now if that's what you're worried about. It might be having a good conversation about your overall financial planning needs. See if pensions fit in now, might be next year or 3 years away. So I'd encourage you to take out the consultation, have a look at how we can lend a hand, and make sure that your pension is working as hard as it can for you.